What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your stock market technical analysis update. But before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we'll look at the ticker symbol SPY, which is our SP 500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so today's price action on SPY has us going up 1.74%, and we are continuing that bullish trend that we've seen in the short term. So the price action is now closing above all the moving averages yet again, which is still a very bullish price action, but we still do need to form that higher high on the daily chart above that $342 level before we can go full bull. But right now we know we're in that short-term bullish trend because we still have that 5 EMA trading nicely above the 13, and we're still getting consecutive price action closes above that 20 simple moving average. You can also see the 20 simple moving average is no longer negative sloping, and it has flattened out. And with more price action to the upside, that 20 simple moving average will start to turn upward and will start to get a positive slope. So when the 20 simple moving average gets that positive slope, that will mean our medium term trend is also turning bullish. So just to recap, we do have a long-term bullish trend, which you can see by this green support trend line. And this green support trend line is telling us that we had a long-term bullish trend ever since the bottom in March. So we did have that correction in the month of September, and we were expecting that month-long cool-off after that long bullish rally. And now we're starting to see an impulsive move in the bullish direction, which is setting the trend for the next rally. And it's starting to look more and more bullish with each and every price action close that we get. So remember, we're doing objective analysis, and we're going to drown out all of the noise around us with politics and stimulus, and we're going to follow the price action in the trends. So the next bullish close we need is above $342 on SPY. And if we look at a 1 hour chart, we can see that we're still forming higher highs and higher lows in this short-term bullish trend that we've been having. You can see back here, the last high we had on September 16th was in the 342s. And if we can take out that high, we will have a daily higher high on this chart. And that will mean that this bullish trend is picking up momentum, and we're going to expect to see that trend continue. So when we have a bullish trend, we want to be buyers of the support levels. And we do see that yesterday's price action got all the way down to the 13 EMA, and we did get a confirmation bounce off of that support level. So we're getting confirmations day after day that this bullish trend is happening to be the real deal. And that means we want to be buyers of the dip, and we want to make sure that those support levels are being held up. So if you look at the support levels, we have the 5 EMA, the 13, the 20, and the 50. And we also have the gap closure at $331 and $329. So we have all kinds of support below us, and we like to start accumulating at support levels because we don't want to go all in until we have that 100% confirmation of that bull rally, which we need that daily higher high on the SPY ETF. So it's looking more and more likely like that ABC correction is ending, and we're starting to see our first impulsive move to the upside, and that's going to start generating upside price targets as soon as we get that daily higher high. So we're still bullish on the S&P 500, and it's looking better and better each day as we get more data to look at. So next up, let's go ahead and take a look at the Nasdaq 100, and we're looking at the QQQ ETF. And we see the Nasdaq 100 also still has that bullish trend, and we did get a price action close above the 5 EMA. We have that short-term bullish trend with that 5 EMA still trading above all the other moving averages, and we do have support down at the 20 simple moving average, which is the top of that gap at 273, and we will have additional support at the 50 EMA and the gap closure at $272. So you can see the Nasdaq 100 already formed a daily higher high back at the beginning of October, and we're starting to come back up into that level, which is right around $281. So if we switch over to a 1 hour chart, we can see that the Nasdaq 100 is going a little bit sideways and hasn't formed a new higher high on the 1 hour chart since that day back in the beginning of October, but we are seeing higher highs and higher lows. So as long as we don't get a lower low on the Nasdaq 100, we still have that bullish trend. And if you look at the daily chart, you can see that all of the moving averages are stacked to the bullish trend side. So we're looking at the price action and we're looking at the trends, and they're both bullish. Therefore, we are still bullish on the Nasdaq 100. You can see that that 20 simple moving average is flattened out, and it looks like it's ready to start sloping upward. And that will mean that that medium-term bull trend is also gaining momentum. Next up, let's take a look at the Dow Jones, and we're looking at DIA ETF here. And we do see the Dow Jones also look very bullish today, closing up 1.87% and taking out a daily higher high. So we do have the Dow Jones looking very strong, and we see a price action close well above that 5 EMA. We see that that 5 EMA is gaining momentum and creating separation from the 13 EMA and we do see that 20 simple moving average starting to slope upward. So the Dow Jones, the Nasdaq 100, and the SP 500 are looking bullish, and there's no reason to believe, if all three indices are looking bullish, that this isn't the real deal start of a bull rally. So if we switch over to a 1 hour chart on the Dow Jones, you can see that we're forming higher highs and higher lows, and we do have one more higher high we would like to take out on the 1 hour chart, which is right around $283. You could see we got right up to that resistance level today, and we did close lower, but that was a monster day for the Dow Jones, and I'm not expecting to see the Dow Jones take out all of these resistance levels in one day. The bulls have plenty of time, and there's still a lot of support below this bullish price action where the price could dip and the bulls could ultimately come right back into this market, driving it higher. So the price action and the trends are telling us to be buyers of the dip, and we want to buy off support levels. We don't want to FOMO into these moves. If you've been following along, we've already been saying it's time to start accumulating, and days like today are proof that this bullish trend is gaining strength. So the Dow Jones is looking very strong and has now formed that daily higher high on a closing price. And that's very bullish, and it's telling us that this trend could be picking up momentum, and it's very possible we could be seeing that money on the sidelines and some of those bearish investors start buying into the market, only driving stocks higher and higher. There's a lot of bearish sentiment, as we've shown in the surveys, and there's a lot of people that think the stock market is heading way lower. So when we have a lot of bearish sentiment and we're starting to see the beginning of a bull rally, there's still a lot of short squeezes, and there's a lot of money on the sidelines that can continue to drive this market higher. So let's go ahead and take a look at the VIX, which is our fear indicator, and we see the VIX went down minus 4.8% today, which is normal VIX behavior because we want to see the VIX go lower as the stock market goes higher, and the stock market was on a tear today, going up almost 2% across the board. So it's no surprise to see the VIX cooling off, but the VIX is still at an elevated level at 28, and there still is going to be a lot of volatility in this market. But volatility is not necessarily a bad thing, and as a trader, volatility can make us a lot of money because there's a lot of price action swinging daily. So right now we see the VIX closing right on our support trend line, and the VIX is still elevated, so we do identify that there is still risk in this market, but that is not going to scare us out of taking advantage of a bullish trend. So let's take a quick look at the sectors driving this market, and we can see that the financials are starting to reverse their bearish trend, and they're coming back up to the resistance trend line. So if the financials can come out here and close above this resistance trend line and start forming higher highs, that will be a sign that the financials are getting out of this bear market of lower highs and lower lows, and we want to see the financials go into a bull market so that we can know that the S&P 500 can see new all-time highs this year. So we do have bank earnings coming up, and it does look like financials are going into that week of earnings with some signs of strength. Next up is the industrial sector, and we see industrials coming all the way back up to our previous all-time high right around $80, and it does look like the bulls are knocking on that door trying to break out above to a new all-time high. We see that bullish trend and that bullish price action, and it's great to see industrials bullish because we want to be bullish on the rest of the stock market, and we need to see all of the sectors being bullish if we're going to be bullish on the S&P 500. Next up is healthcare, and we do see healthcare barely poking out above our higher high on the daily chart and confirming that that bullish trend is gaining momentum. We see that 5 EMA breaking out above, and it's showing that these sectors are picking up strength, and that shows why we're seeing strength in the stock market across the board. All of these sectors are showing bullish trends, and all of the indices are on an absolute bull run right now. Next up is the US dollar, and we see the dollar still struggling to gain traction, but still holding up above our support trend line. So with the dollar holding up on support, I still have to give benefit of the doubt to the bulls, and it's likely that we're going to see some US dollar strength. Now the US dollar has been inversely related to the stock market, so if we see US dollar strength, we would expect to see a slight cool off in the stock market. However, that inverse relationship doesn't have to be there, and we could see that relationship starting to snap soon. Now, we would expect to see the dollar weaken with a new stimulus, but it is likely that the stimulus deal is not going to happen before the election, so we would expect to see a slight increase in the strength of the dollar. So if the dollar is getting weaker, we expect gold to get stronger, and we do see gold had a slight up day today, but still heading down towards our 1800 support level. So we did see gold come up, test our previous support as resistance, and it does look like we're heading down to 1800. And if you're following the channel, you know we want to be a buyer of gold at 1800 if we can get a confirmation bounce off of that support level. Next up is Apple, which is the market moving stock, and we see Apple holding on to its short-term bullish trend, closing back above the 5 EMA, and we see that 5 EMA is still holding up above the 13 EMA. So we still have bullish price action and a bullish trend on Apple. And Apple is that market moving stock that we want to see show strength if we're going to be bullish on the rest of the stock market. So Apple's doing a nice consolidation right above its 20 simple moving average, and we see all of the moving averages stacked into the bullish directions. So we're going to remain bullish on Apple for the time being. Next up is Tesla, and we do see Tesla did support our resistance trendline breakout, and it did act as support, and we did see a confirmation bounce to the upside, closing above all the moving averages today. So it does look like Tesla's holding on to that bullish trend, and it does look like the breakout to the bull side is going to be the real deal. So I'm looking for Tesla to come back up to this $500 level, and we're going to see if the bulls can break out above 500 and form a new all-time high on Tesla. So right now our price target on Tesla is still at $500 level, and when we get up to $500, we'll see if it's going to act as resistance or if we're going to break right through that $500 level and start forming new all-time highs. Next up is Bitcoin, and we do see that Bitcoin did break out of our consolidation wedge to the bull side. So very similar to Tesla, it tested its resistance trend line as support, and we are seeing a confirmation bounce. So this does look like a good time to be adding some Bitcoin. And it does look like the bulls are going to drive Bitcoin back up to that $11,000 level, where we'll ultimately see the test if that's going to act as resistance or if we're going to break right through and start heading back to $12,000 on Bitcoin. So going back to the S&P 500, we see bullish price action and bullish trends, and we want to be buyers of the dip off of those support levels. But to become fully bullish, we really do want to see that close above 342, and it's looking more and more likely like we're going to see the price action get up there and close above 342. You can see here on the 4-hour chart, it does look like we're starting to form some type of inverse head and shoulders, or you could even call this some type of a cup and handle pattern. And we know both of those patterns are bullish. So everything is still pointing to bullish. All of the technicals and the price action and all of the indicators are telling us that the stock market wants to go higher. So for that reason, we're going to remain objective and we're going to block out all of the noise, and we want to be bullish on the stock market in the short term. So please remember to help me out by smashing that like button. I really hope these videos are helping you out. And if you haven't already, subscribe to my channel so you can follow along with all of my updates. Thanks for watching, everybody. And as always, I will see you in the next episode.